We're traders. We would rather trade, just like a fisherman would rather fish, right? You're a fisherman, want to fish. But when you see a hurricane, you're not like, I'm a fisherman, I'm going to fish. You know, if it's January and you're driving along I-80 through Nebraska and you see a farmer out on his tractor driving around in the snow, you're not thinking, that's a hell of a farmer. Look at him. He's dedicated. He's farming all the time. You're thinking, what's that moron doing? Farming in the wrong conditions, right? I think it's the same with the fishermen. When you see a guy like pulling up with his little dinghy, his little rowboat, and his fishing pole, and you got 15-foot swells, you're not like, that's a bold fisherman. He's bold. He's ready. I admire him. I'm going to follow in his footsteps. You're thinking, that's a moron. So conditions matter, obviously, right? And we've yeah, that'd be an interesting one, Press. That's an interesting thought. Like where I think the problem though is the instability of the tariff policies, right? It's like he's like, oh, these policies are fixed. They're because tariff policies only work if the expectation is that you're bringing manufacturing back. You can't take the tariff off once they get here. You've got to basically commit forever, in order for it to make sense for those factories to stay there, right? Like otherwise, it immediately becomes cheaper again, and someone else will make it over there. It's not. And so to be like, well, these policies are fixed, and then the next day's like, had a great conversation with Cambodia. They want to make some deals. You're like, wait, what? Make deals? So I think the problem is that there's just not enough stability in the tariff policies themselves that you would be able to. You'd be like, okay, I found it, and then the next day they're like, we just made a deal and it's off, and you're like, what? I just did all. Anyways, let's get started. Happy Sunday, everybody. Welcome, Market Watch Group Sunday Market Insights. This is the day you should always, unless you're in church or you're, on vacation, something going on. This is the best day where we can just kind of chimps in the cage. We're all like, okay, couple of days away, etc., etc. El Jago says, wondering how the current condition will affect earnings, especially guidance. Guidance that's what crushes, right? Anytime something responds negatively to earnings, well, not anytime, the majority of the time. I can't tell you how many times over the years people are like, they exceeded their expectations. Why did it drop? Because you have to follow the but, right? Follow the but. That's all that matters. We exceeded our last quarter by 30%, but we see some headwinds next quarter. And everyone's like, headwinds? I'm out. That's it. And I think that's exactly what El Jago's talking about, right? The but. What are the tariffs going to create as a but? Absolutely the right conversation. In fact, it's a good time to orient ourselves. Let's go take a peek at the financials today, or we always take a peek at the financials. As we take a peek at the financials, let's just make sure we orient around their earnings dates, which nowadays is the kickoff to that 2-week earnings window that we talk about, earnings season. Great flag, El Jago. Thanks for bringing it up. As always, this is educational, illustrative purposes only. We never provide anything that should be construed as a recommendation to buy or sell any financial security or product. We're not brokers. We're not advisors. Yada, yada, yada. Here's the agenda today. We're going to posture. We're going to posture the hell out of this market. I have a feeling we're going to set a negative record today for a group. Interestingly, almost on the 2-year anniversary, I was looking back at our first market posture tracked as a group. Interestingly, the group was like 3 people to begin with. Yeah, 2 people. Now, what's the record? So we started April 16th, I believe, in 2023, and the record in October of 2023 was a minus 0.5. We're sitting at a 0, and boy, it was a nasty week. So there you go. We'll posture. We'll look at the economic calendar, though. Again, the economic calendar is not really what's driving information for us right now, right? I would say that the trade war, which is clearly a trade war now, as China retaliated with a pretty hefty, and now we're waiting for the EU response. Canada has already escalated, and I believe Mexico is preparing as well. So, I don't know. You know, to me, the strategy just kind of feels like, you're like, we need to work on our highway system. So let's close the whole thing and break them all at once and then start fixing. I don't know. It's a weird, like, is this the right strategy? You guys know, my take. Watch list. Or create deals around us, or create more deals around us, trade around us. I don't know. Do you feel like that's what you bought into? Was like a extended period of weakness? Here's my thought. Everyone keeps saying manufacturing jobs. I want a number. What's the number of manufacturing jobs that we would like to see come back, and that they think I think from a product standpoint, meaning it should be driven by data, by what are the indications. So if the objective is jobs, put a number on it and say, hey, we think that by doing this, we're going to create X number of jobs in X number of years, and we should start seeing it by Y. That way we have like some metric to be like, okay. If you tell me, because right now they're just like, there could be some pain. We're not sure how long. We don't know how deep, but we're pretty sure it'll be worth it at some point. It seems vague to me. How many jobs? And then the question becomes, how many jobs are we willing to lose if we hit a recession because of this in the meantime, right? And then if we lose those and come back less, but they're manufacturing. Remember, manufacturing's blue collar jobs. It's not really building up the middle class. I'm just saying, if that's our objective, what is the objective? Is it fentanyl? Is it that we've been ripped off, but somehow still are 27% of the world's GDP and the most prosperous nation in the world? What's the end? Begin with the end in mind is the thought I have. What's the end we're looking for, without just sort of saying, we'll all be rich, it'll be great. That sounds like the gumdrop and lollipop forest, and we ride our unicorns. Okay, let's get to it. Let's posture. Here's the reality of that. It will be great. Feels like it's accelerating into something real nasty, and that's what we need to be prepared to trade or watch. To press this point about being in cash, the futures pretty much stayed dialed in where they were. We ended at 505.28. Futures were sitting at 505.60. That was Friday at 5 p.m. Eastern when they shut down for the day. Maybe it was 8 p.m. I'm not sure. Maybe it's 8. As April 9th replaces April 2nd on the matter of tariffs, uncertainty remains the passcode for market posture. Yeah, that's the instability of the policy, right? because no one believes if there's a date of they're going to start on this date, that there's not going to be like, well, maybe we'll do this or maybe we'll do that. And this might happen. And we're making deals and we're, again, it's very, for us to expect any stability in the market when there's instability in the tariff policy, that would be our mistake. I agree, right? El Jago, I agree. In fact, I think what we're going to see is that our market posture, if we just simply follow the posture, what is it telling us? The score is going to be at its worst level. We've been at best negative for neutral for weeks. And the momentum has been negative or flat. There's been nothing positive. It's not like, now at the same time we say, hey, there will be V's that pop out of this. There are still stocks that show strength. I am still going to put on some bullish trades. A lot? Obviously not. Here or there, when I'm like, hey, the market's at support. I've got an uptrending stock at a support level. If it's going to lead, this is a great one. All right, let's put it on. And I'm going to manage it because if I get 3 days, it doesn't have to be a V bottom. If I get 3 or 4 days, I'll move my stop. I'll take a little piece. And if I break even, I'll be like, hey, I gave it a shot. And if I make a little bit, I'll be like, great, made a little bit. And if I happen to catch something, even better still. What does that mean? It means I'm setting my expectations appropriately for these conditions. Less trades, less risk per trade, faster to take profits, taking more profits when I scale out, quicker to tighten stops. I don't have much expectations right now. I want to stay engaged. I want to make sure I have a good sense of marks that will cause me to think it's getting better or it's getting worse. Again, one of the things I want to point to try to say how we try to maintain objectivity is jobs. Jobs came in great. That's great. Again, we've pointed to jobs quite often through the last 2 years. This is in the Biden administration. We talked about it at times. Even in the recession of, I don't think we were actually working. I'm going back to some coaching time. Back in 2022, the reason we only had a 27% market decline in a bear market, that's a very mild bear. Bear is 20, it went to 27. That's a very mild bear. What's a deep bear? 55, 65. We've seen, the 65 was in 08 on the S&P. That's a deep bear. Why was it a mild bear? Because we had good jobs. So if we do hit a bear market this time, am I like, oh, we're going down 55%? No, I would be thinking, okay, it sucks, but it's probably going to be a mild bear. I'm thinking 27 to 30, 35, and then it can recover. Why would I think that? Jobs, still jobs, because the jobs came back. If someone said, oh, people are not hiring as much because of the tariffs. False. We have not seen any evidence of that yet. Let's just actually jump into the economic. Whoops, wrong window. Let's just go back to job. So here it is. Job openings. Where's Tuesday? We expected 7.7. We got 7.6. That's just data fluctuations, margin of error. We expected 120 for private. We got 155. That's back into a bullish maintenance. That's maintaining a bullish labor market number. Jobless claims, we haven't been anywhere near 250 for weeks and weeks. It's been in this 220s for a while, right where it should be. Very, very good maintenance. And we were expecting 140 and we got 228. We got better than expected in March. Now, do I have the same the same perspective of cynicism, skepticism, whatever you want to call it, about the report that I did when George Bush was president, and then when Clinton was president, and then Clinton and then Bush, sorry, I went in the wrong order, and then Obama, right? Yes. It's always, they're always going to give numbers and then make revisions. I know there was like a big deal made of it where they're like, they added jobs, inflated the jobs. You're like, yep, they did. Everyone does. Like, it's not, It's going to happen again. So could this be an inflated number right here under the new Department of Labor, where they're like, yeah, put out a bigger number. We'll come back and adjust it in 6 months and say, actually, it was only 160. Yeah, of course they could. Yeah. I think we would be naive if we think that they couldn't, wouldn't, haven't, wouldn't. But for now, that's the data that we have. Okay, I accept it. It's still in a level that, to me, maintains some strength. Okay. Next week, I know I'm jumping ahead to this. What do we have next week that we might worry about? One of my up-and-coming feds, Adriana Kugler. Love the name. Fantastic. Minutes of the Fed meeting on Wednesday. They're going to talk about what? Obviously, they're going to be. That's going to be an important one right there. I think Wednesday will be pretty important because it's going to give us some insight as to like how the tone of the conversation around tariffs. Thursday we have obviously our normal jobless claims every Thursday. We just keep that's just a like when you're driving and you just take a quick peek at your speed. Yeah, everything's fine. We don't spend a lot of time perusing over it. CPI on Thursday, PPI on Friday. Yeah, it's a pretty big week. Weighted heavy in the second half. Not much Monday or Tuesday. Which means what? Which means Monday is going to be all about international reaction to the tariffs. That's what's going to happen. International reaction to the tariffs. China kicked theirs up. China kicked theirs up, and now the EU is looking at their response. As El Jago said, they don't kick in till the 9th, which means there's ambiguity, instability, and uncertainty until the 9th. Okay, let's get to the posture. How's everybody feeling? I kind of feel like everyone's okay simply because so far it's mostly cash. Maybe you booked some gains on some puts, hopefully. As I felt good about my gain on Thursday, then watched Friday, I'm like, oh, wow. But, oh yeah. Okay, so Miguel said maybe there's a method. Doge checks. Well, that's the dangle, right? That's the reality show dangle. Maybe there's something coming. Now, here's the thing about that check. That check, if it gets paid, would only go, it wouldn't be a general stimulus. And it wouldn't do the right way, right? Because the only people who would receive that check are people who pay taxes, like net pay taxes. Or so if you're someone who makes like 50K or less, you're not going to see a penny, not a penny. I believe they said the threshold of where you start to see money is close to 100K. That's the income level that you would need to have the tax liability necessary where that comes back. That's sounds crazy, right? So then all of a sudden, you take that money and give it to the wealthiest, whatever that would be, 20%? I don't know. Anyways, middle class. Yeah, the upper middle class. Really, the upper middle class. I think it misses a lot of middle class from what I read. But there's no way they would do that. Absolutely not. That money is earmarked for tax cuts. Let it go to the debt, right? Well, it can't go to the debt if it goes to tax cuts. That would be too responsible, press. That would be way too responsible. Okay. Let's go to the weekly. A lot of things happened. For me, we both broke lows. Let me get my pen. Where's my drawing tools? Yeah, not good. So we smashed these lows right here, which, you know, kind of was an important level as you look across. So at this point, you know, we're you know, trying to hold on to this level here. That's a I guess you could maybe include that April of 24 low. But I'm going to, there's no trend. I'm not going to be like, this is my score. That's not a trend, obviously, right? So what I am going to do is I'm going to basically say, for taking out this low, you're going to minus a quarter of a point there. And for breaking the trend line, I'm going to give it a minus a quarter of a point for that. So I'm going to break this down to a minus, I'm going to take it down minus half of a point. And it is, nope. Where are you? Posture log. Copy, insert. April 6th. Crazy. Time is flying. 0.25. Okay, so I'm basically coming into a neutral point here. And I want to make the point that just like we do on the short term, I don't want to overreact. This thing could easily rebound and get back into this level. And if it gets to this level and goes sideways, that would be a 0. I don't want to overreact my score. Half a point's a pretty good knock in 1 week to the long-term score. If you went back, historically, you would rarely see the long-term lose a half of a point. That's, you know, we just want to maintain perspective of what that means. So you can see already just with that first assessment, and I think we all agree it would be very hard for any of our scoring mechanisms to go up based on the week that we had. It's only going to get worse from here. So we are now at, after just the first score, we're now at the lowest we've ever seen since April of 2023, 2 years, almost to the date. Okay, let's go to short term. Keep the conversation going. What did you score yours? Do you agree? Have you gone negative on your long term? Let me know. I want to know. Do you think I'm right? Do you think I'm going too slow and needs to go faster? Let's get our thoughts on the table. Let's get some spaghetti on the wall. See what sticks. Okay. What's going on here? John Wells says maybe too slow. If anything, right? If anything. But that is still by design. And that's where I've had plenty of times where I did go quickly. And then I'm like, yeah, I knee jerked like the market did. And I'm not going to let myself do it. So that might be the case. We'll see. I'm open to it. But it is deliberate that I am trying to not go too fast more than I'm not trying to go too slow, I guess, if that's a accurate way to describe it. Thank you for weighing in. I appreciate it. Yeah, I think we kind of have to drop it. We'll get there. That score, we'll get there. Remember that implied, but so when you look at our scoring process, and this is for anyone who's new or newer, 6 components, right? 6 components. The long-term trend is worth 2 points. The short term is 3. That's the most important criteria because that's what we trade, the short-term trend. Then we have these 3 here that are all 1 point. Volume, major market, sector rotation. Doesn't mean they're not important. There's been times where those things have kept us in the situation or turned it quickly for us. Like those are very important 1 point scores. And then we get to the VIX and we're back to 2 points again, right? And that's it might seem simple, but I've tweaked it and refined it over the years to that. Now, for me, and this is a great starting point for the group, and the group orients itself, and then undoubtedly, someone's going to be like, you know what, I need this. And people have changed this all the time. It is a range of plus. Yeah. So I try to put that here, plus or minus. I mean, every score is empirical. So remember, it's not 0 is bad, 0 is neutral. -2 is bad, right? Major market, you can see this is close to as bad as it gets. The major market is lined up defensively, Dow on top, NASDAQ, well, we'll see it, but yes. Anyway, just I know it's sometimes good to just orient ourselves on what does this mean and why does it mean so much to us? Because this allows us to have the ability to see the market components that are most likely to give us the information we need to make trade decisions in a way that, even though we are analyzing, which makes it subjective, right? It's not like we're measuring it and then saying that's a this. And people try to, believe me. But I believe that if you are objective in your subjectivity, if you're consistent in your analysis and what you're trying to accomplish, it works great. And we've seen it do its job, I think. So anyway, let's go back to short term. Out of 3 points, yeah, it has to be negative for sure at this point. I'm thinking at least a half of. I mean, it's so hard. It smashed through this. That's a 1/4 of a point. Look how far back we have to go to even find. We took out this huge level of support right through here. That's another 1/4 of a point. And then, I mean, we even took out this low here. How about I'm going to go minus 0.75 here, and I want to know what you guys think about that. Let's mark them, okay? This support level, minus 0.25. Let me get a straight line so I can go straight across. Then I'm going to go right through here. You can see that was a pretty big support resistance thing, right? So let's go minus 0.25 for that. And I'm going to even go all the way back here and say we took out, and I'm not going to actually go to the low. I'm going to go here, and I want you to see why. Because remember, we opened at the bottom, but we closed at the top, and that actually connects pretty well through this low. And we went right through that, right? What's the next step is around the very, very low from back here in April of last year is right at this level, which ironically is close to 493 is close to bear market. That's 491. That's bear market. When we touch this, this is how close we are to this being called bear market territory. And ironically, our posture is moving into a bearish zone with a negative at the same time. So there you go. Which makes us a little bit more concerned about it being an extended, right? Especially as we know that May, June, July are cyclically and historically not great months for the market already. Okay, so yeah, I took out that line there. That means another minus 0.25. That might be one of the worst ever. Now I could go back and see what I did around the pandemic. I could go dig that up. But I'm going to say that we need to drop it 3/4 of a point. Yes or no? You agree or disagree? That's where I'm going. Pretty gnarly. Let's get it in there. Interestingly, I don't think the volume is going to drop. So this is going to a minus 0.5. Bam. It's a hard one. Bob Roland. I hear you. Happy Sunday to you, by the way. Good to see you. Let's get some volume analysis going here. If you're new and you have a question, ask it, because if you have it, there's a good chance someone else has it. There's never a bad rabbit hole to go down. because sometimes it can really lead to good places. So just let me know. We're all marked up. I think I'm current. So I've got sell 1, 2, 3, 4 over here. 5, 6, fresh, new. I've got one buy. Then we have a buy. And then another buy. So it's like the buyers, that was the thing. It was lined up in a way that if there, because everybody was like, he may do something different on the tariffs. He may just pull it back and be like, oh, I'm going to wait that was the thing. And people were pre-positioning for that. I think regretfully so now right? And we were talking about it, but we were like, hey, let's wait and see. Anyways, not only wait and see, but hold some puts, in fact. Okay. But I've got 1, 2, 3 buys and 2 ties. 6, 3, and 2. 6, 3, and 2. Sellers, buyers, ties. So clearly the sellers have it, but it's not like this outrageously, bad thing. I'm going to keep it at a minus 0.5 for me. And clearly its sanity check says it's negative, right? So, okay. Funny that did not change. But remember, it tends to go early and then stay for a while and then maybe go early the opposite way is what we would be looking for. Major market. Let's get that up. Where are you? Okay, we're now at 200 days. Who's at the top? The Dow. Who's at the bottom? The NASDAQ. There you are. Who's second bottom? The Russell. The S&P in the middle. That's a defensive orientation, right? That's showing that people are more likely to hold on to Dow components, defensive components. We see it on the 200-day. We go to the 133. What do we see? Same thing, just reverse the bottom spot. NASDAQ is second from the bottom. Russell's bottom. Dow still on top, still showing that defensiveness. 66. Oh, more of the same. There, all of this. I mean, it's all 3 time frames and has been. I kind of feel like I'm going to drop that to the -1. This is textbook. This is the worst it gets. Every time frame shows the same thing. Every time frame shows the same thing. The NASDAQ is just struggling. Do I take it to the -1? I'm not sure that it's ever been to -1. If there was ever a time, it's now. Nope, not 0.1, buddy. -1. Okay, thoughts? Who's there? Who's with me? Who's worse? All right, we'll keep going. Sector rotation has been a bastion of hope of trying to, all of a sudden, maybe John's like, maybe Scott's actually going pretty fast to the downside with his score. We're on track for a -2 points, I think, at least. I don't know. Let's see. Press says yes. El Jago says yes. We have a quorum. Let's keep going. Sectors. Okay. Who's the worst? Technology. Who's the best? Financials. So that's weird. You're like, okay, what's financials are doing up there? We saw a little bit of like trying communication services. And then we also have utilities. Okay, so kind of a mixed bag, but still a couple of growth sectors hanging out near the top. Then we come in here and it's dropped, but there's financials. There's communication services. And then we have some energy. Who's down at the bottom? Materials, technology, healthcare. So kind of a mixed bag. We're seeing a little bit on both sides, right? Industrials down a little bit. Let's go to 66 and see if anything stands out. As of right now, we're leaned more negative than positive. And I think that's fair. Energy towards the top, staples, materials, financial. Yeah. Who's at the bottom? Discretionary, technology. I'm leaning towards taking this down another quarter of a point to a -0.5. I mean, there's some like, it's, remnants of bullishness and growth near, but I definitely see it more negative. Let's see if the 22 convinces me and or press of anything. Utilities on top. Staples second. Yeah, I think we need to. Steven's not here today. Steven's always like, I'm going to give it a little bit of hope in case. It always makes me laugh. I love it. So mixed. I agree it's mixed. The big thing for me was just like, I don't know that I had it scored negative enough already. There's really, other than like 200-day and 133, I feel like there's some remnants there. But once you get to 66, you're kind of, when you're scoring, you're like, wait a second. Tech is way down. Discretionary way down. Nothing growth is above zero. I wouldn't go any lower than this from now, but yeah. And then the full bearish profile, if you're wavering, if you're on the fence, the 22 pushes you, for me, to the drop at a quarter point side. I appreciate that perspective. So I'd like to know, El Jago, what your final score is based on. That's the funny thing, right? Is someone will be like, oh, I actually held off when you scored it, but on a different thing, you might have scored it and I held off, and we end up at the same place. We might look at our markers slightly differently, but overall, I feel like that's a good balance and check of what it is that we're doing. So I appreciate when you guys lend that perspective. Okay, VIX, let's finish here. Actually, we did pretty well getting through this thing today. Pat ourselves on the back. Somebody said we better get here. I think John Wells said that. Yeah, this is another one that's going to have to drop probably quite a bit. 3/4 again. It's just so much, right? We took out this high, then this high. So -1/4 from this one. And remember, this is just oriented in reverse. Going up is bad. Going up is fear. So going up is we lower the score. Going down is fear coming out of the market, confidence coming back in, then we would raise our score. And then I think we would all agree that this 15% day in and of itself, regardless, I could go back and I could show you how it blasted through previous levels that we haven't hit since 2020. But I actually think that this is warranted from that day alone. Talk to me if you agree. I could pull it back just to show you, but I think this is another 3/4 point drop, which that's pretty much as bad as it gets. 3/4 of a point in 1 week is like, it just got clobbered. And I agree, Press. Historic. This might be the biggest drop in 1 week we've ever seen. -0.7, which as you look at the week, you're like, well, yeah, that makes sense. I'm going to go ahead and mark this. Let's go back a little ways. Now, remember, this was the Great Pearl Clutch. We're going to just discount that because that was just weird. But here you can see we went right through all of these highs. This is 2022. That was in a bear market. It was a bear market by April, by here. And it lasted all the way until here. And we went through those highs. Those were the extreme levels of fear during that bear market. We went through that. This is going all the way back to 2020, post-pandemic. this is recovery. And you can see we got up to this level here. The recovery, John, I would say this is the kind of thing we would be looking for. This recovery created some pretty nice bullish opportunities. 625, 714. I'm going to just mark these dates real quick. 625, 714, 727, all of 2020. I'm going to go look at those dates for nothing else but this recovery, which is where we're like, hey, could we recover once it's done with this? This also shows us that there could be more over the next couple of days. And look at the extent of what it looks like when it gets up here. These are going to be some gnarly days if we have these same two types of things. But recovery coming from that. Let's go back out of SPY. And let's go back. I said June 25th. And you can see June 25th tested a little and then turned and gave you this. So there's one. I said July 14th there. Nice little pickup there. And then I said July 27th here. Oh, that was a great little pickup right here on this little dip. Getting that VIX confirmation of de-escalation, that's what I would be looking for that type of a recovery. So yeah, hopefully that makes sense. But yeah, interesting that we have to go back to the pandemic to correlate this thing. Okay, let's mark it. That's taking this down to a minus 0.25. Arguably, if there was a level where I think I was, in hindsight, a little too slow with my market posture score, it would be the VIX. As I look at it now, I really feel like it should be more like a -1. I mean, it got there so fast. I kind of almost feel like that's actually a minus. I'm doing it. I'm taking. It's almost a makeup. But yeah, I'm taking a full point of that VIX, and hopefully you get a sense of why. Let me go back to that VIX, and you get the context. I mean, yeah, that's a that right there is actually, I'm giving that a full minus half of a point. Not just a quarter of a point, a minus half of a point. There's my final, minus 0.275. Just an absolutely catastrophic week, obviously. But does that mean that we can just be like, oh, well, now we're minus 0.275, so we can just go trade bearishly? Obviously, it doesn't mean that. It means that there's a lot of negativity showing up in the market. Now, does it continue? There's a very good chance it could, and that's what we'll look for. If we have a bullish recovery, so Kevin, great question. Let me go even further back because I didn't go back enough. I have to go more than 5 years, interestingly, now. I'm going to go weekly. But it originally got up to 85, like when the pandemic really first got nasty. I mean, we were seeing the market go limit down 5%, and then it would open and then drop to like 8%. I mean, it was just gnarly. And you can see, though, that like right in here around here, right there on May 4th, that was Jer Bear. Jer Bear did that. So if anyone is like, oh, Jer Bear, bro, Jer Bear did that. He came in like a white knight on a horse, and he wrangled the market during the pandemic, right? Did all the right things at that time. Later on, he didn't, but that time he did. Don't fight the Fed. So he did what he needed to do. Then around here, so it was still nasty. It was still popping up, but around here is, no, let's see. Maybe I'm off a little bit. Yeah, Fed was here. Then in June, when we saw it, it spiked again. But in June, what happened? As things were shutting down, all of a sudden, all the sports bettors were like liquidating their DraftKings accounts and opening Robinhood accounts. And right. And like this, it injected this weird new investor. And during this time, it was kind of funky and bullish. It was very odd. Anyways, but yes, the VIX was still trying to like figure out like, what the hell are we doing here? Like no one really knew. But it's after it spikes up to this point, as it comes down, this is a wonderful period of time of trading, this de-escalation. And on the daily, it looks like this. And it kind of gave a few opportunities to confirm as that de-escalation continues. These are things that tell us give it an extra quarter of a point here and then give it a quarter of a point here, right? And they're not just scored in the market posture, but they're also marks. I am looking for this actively as a mark during the week to be like, whoa, that's subtle but powerful. That's something that'll help push me into a bullish trade and be like, hey, if the institutions are subtly moving some money in, I also want to subtly move some money in. I don't know what this looks like right here. That's supposed to say plus 0.25. I don't know. I have no explanation. I got nothing. Okay, so let's go look at our watch list now. What is the bottom line of all this? Yeah, be careful these next couple of days, please. What's good in a 45 VIX? A day trade if you're going to do something in and out. Don't carry overnight. Day trading is I mean, this could have a recovery if some good news came out. This thing could recover like this, which in an intraday chart looks like this, and because you're like, hey, I could trade that and that and that if you have the ability to sit and watch it during the day. Otherwise, cash is a position. Can I put the posture up again? Absolutely, Bob Rowland. Of course I can. Bam, there it is. So, I mean, honestly, the odds of me putting on a swing trade right now are just low. I'm thinking that I might do. Tell me what you guys think about this. And a momentum trade in the day. So it's not a day trade, but it would be a trade built using like a 30-minute chart. We'd probably look at to last maybe 2 or 3 hours. It would be very timely. It would come probably sometime after the first half hour, maybe in the first hour. Let me know if that's something that, as a trade alert, would be interesting. I'm also thinking, do I want to do some, butterfly or any kind of time spreads, taking advantage of this ultra high volatility? That might be something I would put on as well. Greg says yes. Okay, so that if that helps you understand the types of things that I'm thinking about, that's what they are. That's what this market has us trade. I'm not like, hey, let's do a bunch of swing trading. Now, if the market gives a dead cat bounce, well, we've got a long way to go. If this thing recovers up and it just sort of starts to die on the vine and then roll over, I'll trade to at least catch this or see if the next shoe dropping takes us down to that bear market territory. 100% I'm looking for bear trades, but not at the bottom after we just dropped 10%. It's too much to think, I'm going to try to get in and ride this thing, even further down, even though it could. If I'm going to do that, I'm going to do that from here to here intraday, not on a swing trade. I will still swing trade if I see the market give me a bear flag. That would be the pattern we're looking for. Bear flag type of setup. Yeah, this market, my expectation for the next 2 days is it could still be real nasty. Especially as we wait to see what EU does in their responses. Questions, comments, concerns? Let's just walk through the list. My watch list is, I mean, look at this. AB just getting smashed. Are you trying to catch any of these at the bottom? Not for a swing trade. Drop it down. Maybe even lower than that if you have the ability to, where you find the time frame that makes sense and then you find your trades. But yeah, right now it's a dangerous market. Everything's hitting. Look at these. I mean, we were looking at this like it's trying, and then it just gets battered. People say, "Oh, they're cheap. They're cheap." Are you sure it's done being cheap? Hey, Steven, good to see you. I was gonna ask, what's the PE ratio mark now after the last 2 days? I think it's changed dramatically. BKR, what is that? Baker Hughes. I mean, right? Everything. Oil. I mean, it's all down. It's just all down. You're going to be hard pressed to find something that you're like, yeah, I'm looking to jump in that. CNP. If CNP pulls back and holds up, and then this market turns, I'll take a stab at a bull trade like that. Then the next time it hits support, are we at support? Is anyone convinced that that's where we are? Steven, where did you end up? I ended up at a minus 2.75. Let me know. Duke Energy just battered. Minus 1.25. Ooh. Well, that feels very neutral. And I feel a little worse than neutral for sure, especially as I look at these charts. Positive volume. That sounds miraculous. Mine stayed the same. Mine was 0.5 to 0.5, minus 0.5 to minus 0.5. I don't know. With those big volume days, it would be very hard to weight them the same, quite honestly. I thought about dropping it just because it's hard to weight the sheer extent of those volume days. Gold setting up, still an inflationary play. New lows. Sideways, new lows. Oh, the carnage. Coca-Cola. Kroger. Okay, Kroger. Maybe if Kroger pulls back and stays above, let's say 65, maybe there's a defensive-oriented bounce there. MasterCard smashed. Oh, it's not looking good, you guys. There's going to be opportunity. I promise you that our pattern of penance, it gets you back in pretty quickly when the time is right. And it keeps you out. Glad I tightened stops quickly at the end of that little ride here. The little engine that couldn't at the end of the day. Nothing can sustain this. This was a tsunami. Nothing escaped. What's on the watch list? Nothing. I'm going to put a commentary up that says this is day trade. Oh, God, look at that. We are thinking RTX could hold up, and look at that. Smashed. Man, insane. Okay, SE smashed. SO. Okay, SPY. So here's the hard thing, right? To score your volume positively, you would have to weight these, like, give it a sanity check. Give it a sanity check. Let the sanity check erase that extra point. This was on an average of 77. This was 217 million. That is 300%. 300%. Here, almost 200%. The best day here got like 20% above average. This one was like 7% above average. So it's like, yeah, the buyers, yay! Kind of feels like you're awarding the buyers a ribbon for trying, right? Like, oh, you did it. Congratulations. You tried so hard. I don't know. Okay. I ended up taking mine down a 0.5 point. No, I didn't. No. I left mine alone. But I think I should have taken it down. I took something else down a 0.5. I think I should. Now as I'm like talking myself into it, I'm going to leave it alone. We'll see what next week brings. I should have thought about the scope of this and taken a 0.25 point away. I'm not going to do it. I'm not going to go back. Participation trophy. Your sector rotation was positive. Okay. Fair enough. I hope you see something subtle and early. Well, that's what I hope. I did not see it. Toast, new lows, TPR, new lows, Tesla pushing down. Actually, I got a trade alert on this one from, I believe it was Gary. I didn't end up pushing it on Friday because it was such a weird day. We'll see if we put this out. Maybe I should have. TSM just getting absolutely destroyed. Apparently, TSM's announcement of a huge $500 billion investment into America that was touted so highly is not really translating here. Twilio, new lows. Visa, new lows. VIX, new highs. Walmart pushing down. Okay. What should we do? Work on your trading plan. If nothing else, don't check out. If you're at a poker table and there's some heavy players there, you're low stacks, but it's the only game in town, don't get up and leave the table. Just play a little more conservatively for a while. Wait until you get in better position. Wait till you feel like the cards are a little more advantageous. But don't check out, right? Don't leave the table. That's where I am right now. Yeah, look, it's tough. It's a tough market. What's my number one objective right now? Don't lose money. Bob Rowland says, drink heavily. Monday will be a day of reckoning to see if the buyer, remember, Stephen, that the EU is looking to put their response out. So I don't know that we're really thinking this is a recovery yet. I agree that when it comes, it could be big. Tony, 100%, he says, sharpening the saw with paper trades. Paper trade. Yeah, so what sectors do well in a depression, John says? Yeah, none. What does the least worst is the question you're asking, which means, look, for us, I mean, if you're looking to invest, it's tough, right? You got to take that long-term perspective. As a trader, you'll notice that what are we thinking about? We're thinking anything intraday just for momentum. We're thinking if this thing pushes for a few days up and the buyers fail to mount on their cycle, then we're going to look for another leg down. And then we will put on bearish swing trades. That matches our posture of minus 0.275. What does well? I'll tell you what trade just crushed it was our last puts that we put out. That's what did well. Bearish trades. Unfortunately, right? It's not... Everyone's like, oh, you're a trader. You can make money up. You can make money down. Sure, you can. I'm not going to trade in a way where I think I'm going to make a lot of money in this market because I'm not confident about the read. It's very reactive, this market. It's up, it's down. It's in hindsight, would you be like, oh, look what I could have done? But we're in it. We're in it. Your lawnmower's right over top of you. And you're a blade of grass. You're just, yeah, it's easy to, get distracted. So what's the thought? Well, the first thing a lot of people are saying, and myself included, is there's a lot of cash in the trading account right now. Great. That cash is actually earning pretty good right now, right? Like it's not doing too bad. I'm earning 0.5% a month. Maybe not quite that much. 0.4, 0.35, I don't know. And it's better than it's been. There you go, 422, right? While the rest of the market just took a 10% haircut, man. I mean, it's what do we got? Flute, thank you, Kevin. Yeah, new lows. New lows. MDLZ, Mondelez. I do like the name. You guys know I'm big on good names. A little cup and handle, maybe? Yeah, okay. Okay. Speaking of the trading plan. We just finished section 3, trading systems. This is a very appropriate section to be working on. Risk management. Let's be right. Portfolio heat. What is my heat? When the market was a 5 or a 6 or a 7, I told you I would have 12 to 15, 16%. That's 8 to 10 trades of various. I mean, let's get our chips on the table. I've got rookies in the garage I'm playing poker with. Let's push. What is my portfolio heat now? Like 3? Right? I've got 3 pros at the table and my stack's kind of small. I'm feeling a little bit intimidated here. I'm not looking to go, bold and aggressive. I'm looking to just be like, easy. Trade risk. Yeah, the trades themselves are smaller. They're easier to manage that way. The number of trades is less because, right, it's all comes down. That whole check and balance system of risk between heat, trade risk, and number of trades. My adjustments. I'm going to tighten stops sooner. My scaling strategies. I'm going to take profits sooner and take more profit. It's not a quarter or a third. It's a half. Right? All of these things are dictated through our market posture that helps us to be like, hey, right? The correlation. Yeah, right. I agree. Risk management, we all did. Some of us blew ourselves up twice. I'm not pointing any fingers, press, but if I were, you would see me pointing at myself. I know, it's sad. It's a badge of honor at some point. Now it's like, yeah, I lasted. The grit. That's my grit. I'm still here, still fighting. It's a wonder I wasn't divorced at the time, but she's still here too. So we made it. Okay. Yeah, this is a big one. Let's talk about this one this week on Tuesdays and stuff. I'll tell you this. One of the great things about the books, Market Wizards, is what you read about. These are like the most successful traders of generations. They all have the same thing in their stories, and that's spectacular blow-ups in the beginning. You can't succeed without a blow-up. I believe that. You can't do it. I one time thought to myself, I'm going to be the person who teaches people, nah, you can't do it. You're going to blow up. You're going to do something. It's just inevitable. I wish we could. It's a rite of passage, 100%. You got to do it. Rite de passage. Okay. Thanks for the extra 8 minutes, you guys. We'll be here tomorrow morning. Let's see what those futures look like. I have a feeling we're going to see the EU response. I have a feeling it's going to be early pressure on the market. But we'll see. Bob Rowland, how many times? How about the last one was the last one? How about that? The last one was the last one. Thanks, everyone. Enjoy the rest of your Sunday. As always, happy trading.
Recording